This country has no idea what's coming for them. They can't get out of the way of what they don't see coming. And when people who are financially literate, just illiterate as it pertains to the reality, but very literate when it comes to reading mainstream, they will find a whole new sense of panic and fear. It will be a religious experience when all of these people finally understand what the Dodd-Frank law is all about and what bail-ins is all about. And like that, it changes.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for October 16th through October 23rd, 2023, while supplies last. This week we feature 3 different specials. 1-ounce silver Morgan rounds from CNT at $2.09 over spot. 1 10th-ounce gold maples at $25 over melt with a minimum order of 5. And 1 10th-ounce Platinum Britannia at $29.99 over melt with a minimum order of 5. First, the Morgan round from CNT celebrates the classic Morgan dollar and 1 full troy ounce of silver. At just $2.09 over spot, it's a great way to stack 4/9 fine 1-ounce silver. The Royal Canadian Mint is one of the most trusted mints in the world, and the 4/9 fine gold maple is their premier coin. The 1 10th-ounce maple adds a further degree of flexibility and liquidity. Rather than tubes, they come 40 to a sheet and are available at just $25 over melt while supplies last. Finally, the 1 10th-ounce Platinum Britannia offers a flexible way to get into platinum, which currently boasts a spot price significantly lower than its ordinary ratio with gold, and many consider it to be highly undervalued. Better yet, the 1 10th-ounce Britannia is just $29.99 over melt with a minimum order of 5. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us every Tuesday for this weekly market update. Today is Tuesday, October 17th, 2023. Andy, thanks for coming back on Liberty and Finance.
Great to see you. The year's flying by, Don. Again, it's crazy. We talk about this a lot, but it's just zoom. I mean, we're already almost to getting to the cold months back up north. But in fact, it just broke here in Florida at 70 degrees today. It's been the hottest summer I've ever been part of in my life. But anyways, time flying and good to be back with you.
Yeah, people around here in Florida also have been warning us for a couple months that there's going to be a week when it all changes. And we say, yeah, sure, because it just kept being hot until 2 days ago, suddenly, whammo, now we got fall. Okay.
Exactly. Well, this is my 3rd summer down here in Florida, and it was a rough one, but I don't know. It sure is lovely here right now. It's 72 degrees here today.
The other thing you and I were talking about before we started the recording was what a crazy time we're living in history. And a lot of the clients that we speak with, as well as just everyday folks that we meet as we go about our lives, that's commonly becomes a topic of conversation that somebody brings up, is like, what kind of upside down, backwards, crazy world are we living in where we have multiple wars going on at the same time? We've got a tumbling, rolling stock market. We've got a debt crisis that's about to blow up with derivatives that are at risk. We've got all kinds of bizarre things happening in every institution, every organization, in the press, and everywhere we turn, our world seems to be behind us.
So we got pushed down the mountain, in 2020 with all of the crazinesses that centered around the lockdowns and wearing masks and doing all sorts of things that none of us thought we would ever have to be experienced with, other than reading it in history books about previous experiences or pandemics. And it's never gone back to normal ever since. Maybe this is the new normal, like we were saying, and I don't know, but it certainly makes it easy to fall down a rabbit hole and to keep on tumbling down the hole the further you go. But it is. To me, that is the craziest part about the last 4 years, has been the speed and the blur and the mixing of all of the craziness that is now just part of everyday life.
I would bring it to it one more thing. There's 2 things. One is the the level of craziness, the level of absurdity, the level of illogic, the level of basically backwards and upside downness, where every place that you turn, it seems that we are, in fact, can no longer have expectations that our government, our press, the education system, the medical system, keep going down the food, has our best interests at heart.
Well, we will be exposed for not being such crazy tinfoil hat nut jobs after all, before the music stops. But it's one of those things where you don't take joy in saying "I told you so," and I guess that's what comes with doing your homework. And most people don't do the homework the way you do, the way that I do. Spend time researching, talking to people, going outside the comfort zone, going outside the mainstream. And it's interesting. I hired a couple people when I moved down here that have become very good friends of mine, independent of working for me. And I asked them, how much has the world changed in your mind's eye since you started working here? And they both say, my goodness gracious, it's like blinders were pulled off my face. Now, both of these guys worked on Wall Street. Both of these guys are very highly educated and have a very sophisticated outlook on finance. And when they came to work for Miles Franklin, they looked at the world completely different today, or they do, than they did a year and a half ago. It's a very interesting conversation if you have it with someone like my two friends here that now work for us, Kevin and John, who come from a different reality. And it's like, wow, where have I been all this time? And I don't know, maybe it's an interesting topic for a podcast that I'll do with these guys coming up, because it's really weird. The people who we think are very well-read, maybe they're just reading the wrong stuff.
And that's not by mistake. I mean, that happens medically. It happens even my son, Elijah, whom many are familiar with here, he got his college degrees in broadcast journalism and economics. And the day that we were there for the preview weekend with the parents to meet the department head of the journalism department, it was interesting because the name of the department is actually Journalism and Public Relations. And there was a strong emphasis by the head of the department explaining that there will be a strong demand ongoing for people with these skills, because every company wants to have prepared an arsenal of basically good news stories to spin anything, the negative that may come out, etc. So we were already being exposed to not that, okay, here's the ironclad code of ethics of being a journalist, thou shalt and thou shalt not. It's like, get ready to help be a spin doctor for all those out there who need it. And that places the rest of us on the other side of that, where we're expecting to get the truth and we're expecting to get a straight story. We're expecting to get the official warning ahead of time before we would, be able to take corrective action, that sort of thing. And in fact, that's not at all what is being delivered to us.
Well, that's where you come in, because journalistic integrity is something that seems to, by and large, be lacking. And that's where guys like you come in. So God bless you and your family and all the people like you who are up here saying the truth. It's just an honor to be.
And let's drag our viewers into this as well, because our subscribers and our viewers are diligent at trying to share. They share posts that we put out there when we have speakers such as yourself or others who come on. They try to share those with their friends, family, and coworkers, anybody, neighbors, etc. People that they can try to help awaken before it's too late. And it's getting closer and closer by the day to where, as you point out, the awakening will be a rude awakening for most and be very hurtful for most, and they won't realize what happened. So anyway, that's the other thing I was going to tell you, the two-pronged thing. One is you mentioned how crazy things are. The other thing is how we've become acclimated to that being quote-unquote the new normal. After 9/11 happened and we had the TSA started, we can no longer walk grandma down to the gate at the airport to see her off, that kind of thing. Now that's just gone. That's just history. People have no idea. Kids wouldn't understand what we're talking about when we said we could just go to the airport for fun and go down and watch planes take off and stuff like that. So it's our world with the Patriot Act, on and on and on, Dodd-Frank Act, keeps changing to where we're getting, as Brother John F., whom we used to interview on our channel, says, we're being herded into the corral, at the slaughterhouse. And we want to make sure that those of us who don't want to be part of that herd have other alternative sources of information, and we can take other alternative actions. So
Brother John's right. No question about it.
That's where we turn to you for some insight on your research that you do on an ongoing basis to give us heads up of what's coming. We've heard a lot of, every fall people are concerned about October in general. October tends to be a volatile month and one where there's oftentimes troubles that are reflected in the declines in the major equity indexes, or also it can be turmoil of other types as well. Right now, that's been something that's been particularly on people's mind as they're looking into this month of October. We just passed the halfway point, and people are wondering, when are we going to see basically a convulsive correction regarding the debt market, the derivatives, etc. And I know that's not your primary sphere of influence or study, but you can't help but get exposed to forward-looking concerns about specific aspects of that and specific timelines. Thoughts that you're having on your research currently on that?
Yeah, well, I mean, first and foremost, and I appreciate that. Look, I think that it's obvious to me that this country has been lulled into a false sense of security, thinking that we can do whatever we want when it comes to borrowing and spending. In August alone, the current administration spent over $527 billion, and it took us until 1975 to accumulate $500 billion in debt. This administration has added more than that in the last 18 days. You got the former head of Walmart coming out and saying U.S. consumers are starting to buckle. You look at an institution like Bank of America, and it bought $760 billion worth of long-term treasuries and mortgages, with almost all of the purchases occurring in mid-2020 at the absolute peak of the long-term bond market prices. And not to mention, they have been the massive silver short on COMEX for the last year, the big one that's been short as much as 1 billion ounces. Who the hell would do that in this environment? And I wonder, could this be that Lehman moment? Their unrealized losses on their bond portfolio is staggering. Could this be the one bank, the one commercial bank that is the sacrificial lamb? And, you talk about that moment. I've talked a lot about the moment where OPEC dumps the dollar and we have this tsunami of inflation. And I can't help but think that, and I didn't see this one coming, and that's the way it always is that you have an idea and maybe the idea comes to fruition, just not the way you thought. I mean, we have a war that is escalating, could very quickly escalate into a regional war. And you get Iran and the United States directly involved. You could see a lot of these countries that are OPEC countries that are in the Middle East side with the BRICS countries, side with Iran, side with the Arab countries, and enact some sort of an embargo. The Strait of Hormuz, this is a checkpoint for nearly 20% of the world's oil. And look at the countries that are there right now, Iran and Egypt and all these new BRICS countries, these countries that are Arab friendly, I should say. You could see a situation where we see inflation really start to spike as a result of much, much higher oil prices. Or it could be that moment where OPEC just says, look, our interests are very divergent, whether it be geopolitically, whether it be in terms of pricing oil. You guys are going green and we're not. This could be the moment where you see this escalate and OPEC just move away from the West and say our interests are converging. Thank you for the memories, but we are going a different direction right now. You could see the petrodollar trade collapse. You could see hyperinflation emerge. Is that possible? Absolutely it is. I mean, could this thing really spiral out of control? Could this turn into something that no one sees coming? Yeah. Could this be the moment where OPEC moves in a different direction? Absolutely. Who knows if this is, but I think it's certainly something to be concerned about. If I had to guess, we see much, much higher oil prices as prices in the Middle East and all the oil in that area goes way up. And the result of that is higher inflation. And the results of that would be the central banks doing what they can to tighten again to fight off that inflation that is not coming down. you had the United Nations just come out the other day and say if they don't relax their 2% inflation target, they're going to blow up the whole system. 3 or 4 or 5% may be the new normal. But look, I just think that this is one of those things that people need to pay very close attention to. And then you look at what's happening with the repo market. It's drying up. The reverse repo market and the repo market, they both have to offset one another. And we're seeing so much of that money that has been used to liquefy businesses when they need it. The repo market, it's disappearing. It's leaving the facility and going directly to the Treasury in search of yield at places like treasurydirect.gov. And the last time we saw the repo market start to really dry up, remember that was when the overnight lending went to as high as 10 or 11%, and the market started to freeze up right before the big crisis. And I think you could see that again. We are seeing a massive draining of liquidity at a time when businesses who need to refinance at higher levels or are paying more money to keep inventory coming in because of the line of credit going up related to prime or whatever it is, the business environment is screaming recession right now because of what's happening with the credit markets. And we can always talk and point to the inverted yield curve, which going back 50 years or longer has always been the precursor to a recession every single time. So maybe now they finally admit we are heading into a recession, but all of these things are converging at one time, which tells me, to your seasonality question, this is a very dangerous time to be a traditionalist. And as our friend Rick Rule says, there are times where if you are not a contrarian, you will be a victim. And I have a feeling we are entering that zone right now. Just look at the S&P 500. You take the top 7 companies out, and the stock market, the large, broad stock market, is down for the year or barely up. It's 7 companies holding this all up. And you start to see tightening and recession and war and rising oil and rising inflation. I mean, all of these things are converging at once. I don't like what I see, not even a little bit.
Yeah, and the other thing that you mentioned earlier is about this concept of a new normal, where psychologically we're accustomed to adapting to. That's a survival technique for humans. It's been very effective, is adapting to changing conditions around us and thinking, okay, this is the new rules of the road. This is how I got to react to. But when we see people then becoming complacent, or on the flip side, becoming paralyzed and overwhelmed because they see so many of these big forces, all their world upside down in so many areas, it can become bewildering, because any of the old assumptions that we are used to making of, this is how I lead my life, these are the responsible things I do, these are the advisors I trust, these are the people I go to tell me how to stay on my... if we're passing a television and they have some ad from one of these big name investment advisory firms, I'm always thinking, what in the world can they be telling their clients of how to really be prepared for the kind of tumult that's likely to be happening in the next period of time? And I'm very concerned, as you are, about the impact that's going to have on ordinary people, on their families, and on their future generations. And it's going to be hurtful for people in our age and stage of life, but it's going to be devastating to our children and grandchildren if people haven't taken other actions on their own.
Look, Dunnigan, and the people who in this industry who I actually admire, the people who push back against me, the dollar bulls and the milkshake theory guys. I mean, I happen to think that the milkshake theory is very, 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 very well thought out, and he's been right until he's not. And the thing of it is that all empires believed that their currency and in this case, their bond market, but their currency would be eternally demanded until it stops. And when confidence in the currency collapses, the impact is all of a sudden and insurmountable. What did we always say? Little by little by little by little, and bang, all at once. And at what point does it become very obvious that the world doesn't want to continue accumulating our debt when we are a country who has chosen debt and inflation over austerity and tough decisions? And it's becoming quite obvious. And I think we are reaching that point. And then you throw into it the geopolitical issues, the coercion, the sanctioning, the wars, choosing sides, along with printing, in 18 days, a half a trillion dollars. I mean, we are entering a period of time where we're going to cross over that Rubicon, and that's that all at once moment. And I think it's happening. I think we are on our way to it. And you look at, what's happening with the BRICS countries. They're not only are they the ones that are buying all the gold, but they're also the ones that are selling all the treasuries. And they've just announced a 3-year de-dollarization plan officially to trade in local currencies like we're seeing right now. And the trading in local currencies has saved these countries billions of dollars already by ditching the dollar. China saved over 10 billion by not using the dollar in oil trades, by using the yuan in settlements with Russia. India saved over 7 billion by purchasing oil at discounted prices from Russia just since February of 2022. And they purchased 186 billion worth of oil from Russian suppliers from China that was laundered through China. And then you got all of these other deals that are being made. And then you see like Gazprom Nefti, it's called, or Neft, Gazprom Neft. It's the second or third largest oil exporting firm in Russia. They said, we're done taking dollars. At what point does this start to really affect things? At what point does it start to gain momentum and these other countries and institutions in this BRICS network start to follow suit? So yeah, I think this, you add the seasonality into it, you add all of these things, and then a couple other things to mention, and then we'll be gone here. We're seeing massive outflows in metal continue. We're down to a multi-year low in gold on COMEX, down to 20 million ounces. Another 500,000 ounces went out this week. 200,000 ounces of gold out the ETFs. The markets, whether it be exchange for physical or outright deliveries off the London Metals Exchange, the Shanghai Metals Exchange, the COMEX market, they are being bled dry. And then you see gold in China being sold at $120 more an ounce than in the LBMA or COMEX. They are beginning to realize that by letting the price rise, it's not a supply-demand thing. It isn't. It's that they realize by slowly letting the price rise, they will siphon and arbitrage all the metal. That way, we are seeing a new system emerge as far as I'm concerned. And look, even the Shanghai Gold Exchange has seen the lowest level of silver that they've had since silver squeeze. Big deliveries keep happening, and the central banks keep buying. And the trend is continuing in 2023. So this is the same thing that we've been talking about, but it's accelerating. And little by little by little by little, logarithmic decay, bang. The gold market blows up. The oil market blows up. The dollar market blows up. What's the first one to do it? Don't know. What is the catalyst to the other markets when one blows? Don't know. But if you don't see this happening, you are not watching. Last thing, I promise. We are also seeing a concerted effort by the Shanghai Gold Exchange and the monetary, what am I trying to say? The Russian gold markets. There's a group, it's called the NRA, SFO NRA Corporation, and it has to do with these Russian, the Russian gold market. There is a concerted effort for these two to join together and to break the West, to break the Western price setting system. And that's coming. You're going to see these countries who have accumulated and are producing all the metal, they're going to render or expose the Western markets as being obsolete. In fact, when the Shanghai market was formed, like in 2014 or 15, the guy that started the Shanghai market, or the politician or the Chinese leader, whoever he was, I'm butchering who he really is, but an authority in China said, when we finally let the gold price be where it should be to expose the real gold price, people are going to be shocked. That's ultimately what they're trying to do. They're going to accumulate all the metal and then they'll reprice it over there. The West will have no pricing power because everyone is going to see that this fractional system, this leverage system, this rigged system is a bunch of malarkey, and it will be a cash and carry system with no futures over there. This is all happening as we speak. And I don't think it's ever been more important to listen to what we're saying, because the acceleration in everything is going to make the opportunity for people to protect themselves become harder and harder and harder as time goes by.
Yeah, that's one of the things that I have to keep reminding clients who call asking, hey, Dunnigan, do you think we're going to get a dip in price where I could scoop up some inventory and that sort of thing, is that, look, there's likely to be volatility in both directions, for sure. We don't know when. But inventory availability and premiums are something we have no way of controlling or predicting. So that happened to us, and a lot of the dealers, everyone recalls back in the COVID crash of March of 2020, the spot prices plunged, premiums shot up, and availability was back ordered 6, 8, sometimes 12 weeks on certain products. Any thoughts from you as a person who's been seasoned in the supply chain of the retail bullion investing industry for 33 years on what happens in those times of high volatility?
Well, we talk a lot about the central banks and everyone else buying coins and this and that. In the first 8 months of this year, we've seen massive pickup in bar and coin demand in Iran, India, and Turkey. Here are the top 5 purchasers of bars and coins. China, number 1, Turkey, number 2, United States, 3, India, and Iran. So, 4 of these 5 countries, Turkey was just told by the European Union that they're not going to be admitted into the Union. And they said, fine, we're going to go another direction. They're going to go to BRICS. So you have 4 of the 5 top leaders or countries here in coin and bar purchases, either in the BRICS or soon to be in the BRICS. And I think the point I'm getting at is that, Iran and Turkey took the place of Switzerland and Germany. So the Western countries that have typically been buying gold and silver coins over all of these years are now being replaced by the countries in the East who are rapidly de-dollarizing. This is going on to the people. In June of this year, the People's Bank of China started to publicly encourage their people to make regular monthly purchases directly from the Shanghai Gold Exchange. What I'm getting at is this is becoming global. This is not just where the U.S. markets get to get all of the coins from the world markets, because the U.S. was traditionally the biggest buyer of these items. And now you have the world waking up who see things more clearly than the people in this country do. And I think I've been very consistent in saying this. My belief is that there will be a banking problem. There will be a bank that fails here before the end of the year that will be bailed in, not bailed out. And when that happens, the market volatility and premiums will go parabolic. The thing that's very hard for people to understand is you got guys like Ted Butler saying there is a massive shortage on COMEX. And then people hear me talk and say, well, that's not the case on the retail level. It's hard for me to wrap my head around it, where everything I read says multi-year lows on the LBMA, on the Shanghai Gold Exchange, on the COMEX, product leaving, being backdoored off ETFs, product leaving. Those are the very sophisticated people. At what point does it translate down to our level? It hasn't yet. And it's confusing for me. It must be really confusing for people who don't follow this stuff as closely. But it's happening, and it's starting to accelerate now, where you see these countries in the East start to buy more coins and bars than the countries in the West do. And you wait and see where there's one moment where the mainstream people in this country wake up and say, do you see that bank was just bailed in? Our neighbors lost everything. That's when it changes like that. And it goes from really favorable environment for the consumer to one that is completely awful. And that's typically what has happened in the past, but nothing, I think, would prepare this market for a bank bailing. I went to lunch the other day here at my country club with 2 guys after a round of golf. And one owns a massive fruit importing company, and the other owns a huge insurance company, offices all around the country. And I said to my buddy Kevin, who works with me, I said, watch this. Neither of them are going to know it. And they look at me like, what's he talking about? And I said, do either of you know what a bail-in is? Neither of them do. Both of them are multimillionaires. Neither of them do. And when they told me where their money was, I almost choked. I'm not going to get into that, but I'll just simply say that this country has no idea what's coming for them. They can't get out of the way of what they don't see coming. And when people who are financially literate, just illiterate as it pertains to the reality, but very literate when it comes to reading mainstream, they will find a whole new sense of panic and fear It will be a religious experience when all of these people finally understand what the Dodd-Frank law is all about and what bail-ins is all about. And like that, it changes. And I know some people watching this would be skeptical of me saying that, talking his book again. But all I can tell you, as heaven and the Lord is my witness, in every bit of honesty I can come up with and sincerity, I believe that's what's going to happen. That will be the awakening. And not only that, it will start to immediately cull the banks, which will wake up more and more and more and more and more people. This will become all at once a crazy, crazy, crazy market environment for precious metals, because it is the only place to go right now if you want to remove counterparty risk and buy something that is not ridiculously overvalued, that has been considered wealth for all eternity, all of time. And the biggest money, the most well-funded money on the planet have been on a buying spree of unprecedented proportions. How much easier could it be to see the tea leaves if you open your eyes and look?
The other aspect of that may be obvious to you, but not to many, is that the ability to do transactions is not just limited by inventory availability, not just limited by accessibility of brokers or companies with which to do business, but the actual ability to transact through the banks, et cetera, can be stressed and threatened as well, and the ability to ship and logistics and all that. So when you talk about a calm before the storm, and you've used that analogy many times with us, that eye of the storm kind of thing, and the backside about to hit you, this is a time when there is inventory. There are lower prices than we've seen and lower premiums in many cases than what we've seen in a long time. And we have the ability to still transact through the banks and still ship. So that ability to take action before it's necessary, that gets back to preparedness, which is where we've been since 2013.
Yeah, and I think it's really important to say these things because, that's the problem about trying to have these conversations and saying it's coming, it's coming, it's coming. The new version of the Little Boy Who Cries Wolf has me on the cover. And it's because I believe it so strongly. And the truth of it is the people watching your show might be the only people out there who actually believe what I'm saying is coming. Other people I would say this to, yeah, right. I believe it in my soul. And I believe it's intended. I believe this is what they want. I think they want to cull the banks. And the only way to do that is to let a bank be bailed in. And it's interesting that in all of these pieces, like the Belt Road Initiative, like gold being reclassified tier 1, like bail-ins, the stuff of the Dodd-Frank Act, money market gating, all of these things are out there, yet so poorly publicized that it's going to set the stage for a very, very, very frightening environment for a lot of people. And it's not conspiracy, it's law. And the law was broken when Silicon and Signature Bank were bailed out. And that was one of the things these two guys said. Well, if that's true, Andy, then why were those banks bailed out in March and April? Good point, I said, and here's why. And talked to him about the Oklahoma senator who was outraged. And it's a perfect storm waiting to happen. And it makes no sense to me, none, zero, why the coins and bars are as cheap as they are and why they are as plentiful in inventory right now as they are. And again, I'm being completely sincere. I am stumped. I have no idea, but I can only think that it will change in the blink of an eye. And right or wrong, I'm going to stick with it. That's my belief.
Yeah, you mentioned the likelihood of the plunder and the culling of the banks. That actually, I would say the culling of the banks, which is the plunder of the people, by the elite. And it's debated whether it was John Dillinger or Willie Sutton, both of them bank robbers, who had the quote when they asked him, "Why do you rob the banks?" He said, "Because that's where the money is." You've said before, if you want to get your hands on the most metals, you'd go after the ETFs. If you want to get your hands on people's life savings, you go after, well, IRAs and 401ks, that's the stock market, but also the banks. So For people who want to protect themselves from this plundering, the great taking, as it's been called by a book by the same name that just came out, what do we have for a weekly special that people can get a hold of?
We still have the Morgan silver dollar rounds that look like Morgan dollars at 209 over. But I'm just going to say something that I haven't said in a very, very, very long time, and that is, if you are able, buy gold and silver eagles, buy gold buffaloes, buy pre-33 U.S. gold coins, buy Morgan silver dollars, buy U.S. made stuff. There are so many states that are moving to allow legal tender coins as currency. There's something in my gut that tells me it would be the best thing to own. If you want the biggest bang for the buck, yeah, you're going to save over $3 an ounce buying the rounds. Is it worth it? I don't know. There's so many unknowns, and I'm a big believer in, if you're buying this stuff, not just for appreciation and whatnot, but because it's wealth, because it would be there to protect you in the event of anything, whatever anything is, then having something that everyone immediately wants, is demanded, is liquid, maybe the most sought after, to me is good advice. Now, we don't make any more money selling you the American-made stuff than anything else. I'm just speaking to you all out there as if we're having a beer sitting at a bar talking, and I have this feeling that the American-made stuff will really, really be the place to be when the event that I see happening happens. I mean, Silver Eagles were north of $14 for 3 years, and now they're a gift at almost a third of what they were at for the last 3+ years. If we see an event, and I can't help, but maybe it's a curse that I have, that I see these things, but I see something worse than what we've seen in the past coming, at least in terms of market dynamics. And in that environment, I would rather have American-made coins. It's not something to go out and trade all your stuff for. It's debatable. If you had 100-ounce bars, you want to trade them for eagles, you'll lose silver. But is it worth it? Maybe. In an environment where half the states in the country are taking coins made by sovereign mints, and some say U.S. only, as legal tender, is it worth it? Maybe. Maybe not. But just, again, laying it all out on the table. And again, that's just my own belief. But the special this week, we're going to do the 1/10-ounce gold maple leafs at $25 over their melt value for a fractional coin. That's about as cheap as you're going to find for a 10th-ounce coin. We have the 1/10-ounce Platinum Britannia at $29.99 over its melt value. Again, with all of these items, you take the price of gold or platinum, divide by 10, add $25 for the gold maple, add $29.99 for the Britannia. On the Britannia, since it's being sourced through a different supplier, they have a minimum of 5-coin order on the Britannia. And then we also have the Morgan round, the silver round that looks very much like a Morgan silver dollar, brand new. And those are $2.09 over. And we're going to try to bring both a gold and silver special every week as long as we can through the end of the year. It's a lot easier to bring them to you now than it was or has been over the last few years. So that's what we have here. But the truth is, just about everything is on sale. So whatever you're looking for, I'm sure we either have it or can get it. And this is the time to do it. Prices and premiums haven't been this good in years.
Well, Andy, we appreciate always your visits here with us. All of our subscribers and our viewers appreciate this to no end. Folks, remember, it's on all of us to help share the word and spread this widely as far as you can to your friends, family, coworkers, neighbors. We've got to get the word out to try to help as many people move out of harm's way while we still can. Andy, as always, thanks for joining us on Liberty and Finance.
Donegan, I love you like a brother. Thanks for having me. I hope you and your family have a wonderful week, and look forward to picking up where we left off next week.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability. and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.